What was the driver of this huge earnings beat, 55% above estimates? How big of a factor was the closure and bankruptcy of Yellow?
Well, it was a big factor, but as you step back from it, it really is our strategic positioning that helped us to be able to capitalize on that. Yellow is was the third largest less than truckload carrier in our industry, and in August they filed for bankruptcy, and that was a significant event for shippers. We've also had some additional recent disruption from Estes cyber attack and a recent closure of Convoy, digital freight broker. And so all of this is in front of shippers. They're trying to deal with this disruption. And so they're looking to partners who have integrated solutions like we do to really be able to respond.
So certainly a lot of disruption in the LTL space. Again, that's less than truckload. Generally, this is where your multiple customers put loads on the same truck as opposed to one customer,
Yes.
in just one truck. I want to make sure the audience is clear about that. I want to go back to Yellow for a second. They previously held just about 10% of the LTL market. They had customers like Walmart and Amazon. You just said you're a beneficiary of their closure. How sustainable are those market share gains and those customer gains?
Well, really, who we've been able to help are customers that we know already.
Okay.
These are customers that came to us very quickly and wanted some additional capacity, additional solutions, and we were able to respond. But that's the good news. And so we feel like there are some things that will shift around as time goes on here. But, we've done, I think, an excellent job serving these customers, and we feel like that it's going to be a sustainable change in our business. And what it's allowed us to do is just better optimize the LTL network that we run and, make good selections and choices with other parts of our business as well.
All right, we're just looking at some of your results. Your revenue per hundredweight up 9% in October. You gave investors a bit of an update for the current month right now. So a very bullish sign for the freight market. Give us a sense. What are you seeing when we go to the holiday season? As we look ahead to the holiday season, I should say, what are your customers telling you about demand, their inventory needs, et cetera?
Well, it's interesting because the overall demand environment is weak. And so this disruption is really playing a role in it. So we feel as we've entered October, that there is a kind of a robust opportunity set for us, but it's not necessarily because of overall demand. For instance, a lot of the work we do is in the manufacturing sector, and the latest read on that is a little bit weaker even. So, what we're doing is navigating, this opportunity set and helping our customers as best we can. And, that's an opportunity for us in October and beyond in the fourth quarter.
So I want to ask you about the overall picture. We've heard a number of companies say that we're still in a freight recession, J.B. Hunt, the most notable one. What's your take about the current freight environment? You said it was soft, but are we still in a freight recession, or is it still that shift in spending from goods to services?
Well, I think it's that shift in spending from goods to services. There has clearly been a pressure point, that we've seen on rates, especially in the full load arena. And some of that is because of the capacity that's serving the industry that comes from, the recovery that we saw in both 2021 and 2022. But, we do see some impact of inventories being run off. And so we're hopeful that as we enter 2024, that things will come back to a more normal level. But right now, we are in, a weaker demand environment overall.